Well, it feels like I'm saying it every day, but on Friday night, US markets hit another all-time high in trading, boosted by some very good results released in the quarterly earnings reporting season last week, and also some meme stock trading that also helped to lift a number of stocks, all ahead of a huge week in the macro. Hi, I'm Michael McCarthy, CEO at Moomoo Australia, and thanks for joining us for our presentation today of the daily. All the action from last week and what might be coming today and throughout the rest of this week. And while we're seeing all-time highs all around the globe, whether it's in the US, whether we look at the German DAX or the UK 100, and even here locally in Australia, within a few percent of our all-time high on the market. And that buoyancy is not restricted to shares. We're also seeing gold within 5 or 6% of its all-time high, and Bitcoin within a few percent of its all-time high. So asset prices really buoyant at the moment, and we're seeing that reflected in trading in the market. But this morning, I'd like to start by highlighting a market that has not yet hit all-time highs. We've got the Seng index on the screen in front of you. Now, this is a daily candle chart. Each one of those candles represents 1 day's trading. And as you can see from the lows that the market hit in April, along with the globe, on concerns about the outlook for global trade, it's had a huge bounce back. And in fact, that's almost a 30% rally that you're looking at in a major market like Hong Kong. It's an extraordinarily strong performance. But the big news is that that still does not get it anywhere near the all-time high, which is above 33,000. So potentially there's another 25% gain for the Hang Seng before it gets anywhere near its all-time high. And this is why so many analysts are pointing to the Hang Seng as a potential source of value in the global markets at the moment. Just about every other market is stretched. The valuations are beyond what we would normally expect to see, and there are real concerns about overvaluations, particularly amongst the most popular and hottest stocks. And yet here's a whole market, the Hang Seng, which has many important companies listed on it, that's trading still at a 25% discount to its all-time high. Not surprisingly, part of this strong performance we're seeing in the Hang Seng represents rotation from other regions into the Hang Seng region, but with so much of a gap between its current price and its all-time high, there may well be much more room for the Hang Seng to catch up. US company reports are also stronger. Alphabet, the big winner from last week's trading. Now, the market was in an unforgiving mood, and those stocks like Tesla that were disappointing or reported disappointing outlooks were severely punished. And yet Alphabet up 4.4% last week after seeing off what appeared to be the threat that artificial intelligence represented to its core search business. So we'll be looking to more reports, more on that in the moment, because we've also got a lot going on in the macro. Over the weekend, we heard of a trade deal to be announced between the EU and the US, and these are two of the world's three largest economies. So a trade deal between Europe and America is good news for the global trade outlook and is likely to bolster strength in the market. We've also got a US Federal Open Market Committee meeting this week, a 2-day meeting that will end on Friday morning our time with an interest rate decision from the Federal Reserve. And while markets are not expecting a rate cut, the commentary could be very influential as markets are still forecasting up to 2 rate cuts in the US before the end of the year. So if the Fed says anything that makes the market step away from that assumption, we could also see a big impact in the share market. Also in the US this week, we've got reads on inflation and on jobs. On Friday night, we've got the non-farm payrolls data. So not only do we have the interest rate decision, we'll have inflation data and jobs data, which feeds directly into future decisions. So it could be a good week and a big week looking at what interest rates might do for the rest of 2025. We also saw some real interest in meme stock trading. Now, those of you who followed the GameStop imbroglio a couple of years back when the COVID restrictions hit trading will be interested to see that a stock like Krispy Kreme has been taken up by what appears to be the same traders. And the big leap that you can see on this chart in Krispy Kreme's share price last week, this is a daily chart, so each candle is 1 day's trading, that big leap appears to have come from nothing more than its appearance on a site called Reddit. And Reddit is the home of the GameStop traders and all those who follow Roaring Kitty and Deep Effing Value, who have pushed meme stocks around for a number of years now. So Krispy Kreme appears to have come on their radar. A lot of talk about a short squeeze. And you can see from this chart that last week, the behavior of Krispy Kreme share price changed enormously. And that big leap, those two big candles, represent an 80% gain in 2 days for Krispy Kreme share price, despite the fact that it appears little has changed with the underlying business of selling donuts. So one that's definitely on the radar. Another one that was caught up in this sort of trading last week was Opendoor, the real estate company. And it does look like that might also get the attention of the meme traders. And we could see elevated volatility again in both Krispy Kreme and Opendoor as those meme traders push the market around. But there's plenty of other aspects of the market to look at. And we've got plenty coming up in terms of reports. 4 of the Magnificent 7 report this week. We've got Apple, Microsoft, Meta and Amazon all giving their quarterly earnings reports. And that's something that the market will be watching for very closely. Now, I'm just going to pull up the chart here of Microsoft. And as you can see, once again, from the April lows, there's been extraordinary gains. Now, this is one of the biggest companies in the US. In fact, it was the biggest there for a while. It's now been overhauled by the likes of NVIDIA, but nonetheless, still a major company. And as you can see, from that April low, Microsoft share price has increased by 50%. That's an extraordinary gain in any stock, let alone a major US stock listing. And it just goes to show that the drivers of the current rally are firmly in place, and that uptrend that you can see in Microsoft stock also firmly in place. So we'll be watching out for plenty of macro this week. The FOMC decision, of course, the dominant one, but plenty of data. We've also got local data coming out. At the moment, we're seeing what looks like a fairly muted start to the trading week, with futures indicating modest falls across the region as we open up. Given the events of the week, both at the micro company level and at the macro level, I don't think markets are likely to remain quiet for too long.